go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today, David Linton. He is the CEO and founder of Updata. David, welcome to the pod.
Hi, good to meet you, Rocco.
David, I'm a big fan of your technique and analysis. It's a lot of the things in your posts on LinkedIn that I see. It's like preaching to the choir. I'm so excited to have you on the pod today. I want to know from you, to start off, where did your interest in TA come from? And then just like a brief overview of your market philosophy.
Yeah, well, I mean, I'm actually Australian, but when I came to university in London, I had to make some money, and I decided to trade options. This was way back in the early 80s, and so I was trading options, and I had this computer, and I used to type all the data in because there was no way of getting data into a computer in those days. I mean, modems were just starting to happen, and that's how I developed the software Updata, because I was constantly updating the prices in this software. And then I found ways of getting the data in to software. And that's all I've ever done is technical analysis. I started Updata, and and I teach technical analysis and trading, and have done all over the world. So.
From the 1980s, has your philosophy changed, or are there things that you've added or taken away?
Yeah, I mean, I think number one for me is keeping it simple. But I think the two big things that happened for me are the Ichimoku clouds, which I wrote a book on, cloud charts. And the point and figure charts we acquired in Dexia, which was very strong in that arena. And so point and figure charts married with the cloud charts has allowed for a two-dimensional analysis. I do use other techniques, but generally speaking, I've looked at so many charts now, I can look at the charts, and I do this multiple time frame where I'm looking at weekly, daily, and 60-minute. So I'm always thinking about the long term, the medium term, and the short term view of the market, and that's really quite important.
How long did it take for you to click? Because when I've only got 4 or 5 years looking at charts myself, but I remember succinctly the day that clicked. It's like seeing the matrix. It's like, boom, okay, I don't have to analyze anymore. I can just see what's with a high probability what's going to happen. How long did it take for you?
I think it's the 10,000 hour rule, to be honest. You basically, once you've done it for 10,000 hours, I mean, I look at thousands of charts every day, and people just say to me, how do you do that? But it's so rapid. I mean, I can just scroll on my charts today. I mean, I'm normally looking at 100 plus charts, probably 200 or 300 charts in a matter of 5 minutes. And I can just very quickly assimilate what's going on. And in doing that process, just explaining to people the key things that I'm seeing very quickly, so that, we can just focus on that. So, I guess it took me a few years, but
I love it.
When you're trading on it, and when you're young and poor and your money really depends on it, you learn very, very quickly.
I'll believe you. So for those listeners on Spotify and Apple, go and check out on YouTube, because David is actually sharing his proprietary charts today with us in this live podcast. And let's get into the meat of it. So commodities, everything, it's on everyone's lips, commodities. We've seen Sigma events that we're not supposed to see not supposed to, but maybe once in every 10,000 years, something like this happens, and it's happened during our lifetime, which is, for our technical analysts, is awesome. For the people that might not know what a Sigma event is, if you can explain that maybe in layman's terms, and then exactly what did the charts show us? This is maybe gonna happen.
Well, I mean, what we're always looking for, I'm always looking for in charts is a pullback and then a buying thrust, which generates these point and figure price targets. I mean, point and figure charts are over 100 years old. People, it's an old technique, but it's still very valid. And you get these buying thrusts.
Yes.
And when commodities pulled back and then gave these big pushes to new highs, they generated upside targets that were unbelievable. So, we've been talking about this for some years, that this commodity super cycle was coming well before, the events of the pandemic and then, inflationary pressures and now Russia-Ukraine situation. Well before that was playing out, these targets were starting to show themselves, and we're seeing big upside targets. And, in January this year, we said, well, the oil price has a target of 150. And the other day we were looking at targets of $200. And it's part of the cycle. Normally what happens is you get bond prices falling, and that's starting to happen now because bond yields are going up. And then you'll see stock prices falling. And again, we're seeing stock markets globally coming off their highs. We're seeing some big counter trend moves, like Hong Kong was up 9% overnight, but it was down 5% and, on 2 days running. So that volatility is there, but that uncertainty at the end of that uptrend is really key. So we're seeing it's happening to bonds. Interest rates and inflation are coming back. It's happening to stocks. I mean, stocks like Apple have given targets now 20-25% lower.
Yes.
Economic activity is starting to slow down. That's the next part of the cycle. And then you get commodities, and the commodity cycle is now driving forward. And of course, that's exasperating inflationary pressures and feeding it back into markets. And then last of all is precious metals. And that's the one where we'll see gold prices rocketing to incredibly high levels. I mean, we put out these reports to clients. We've got a target for gold at $11,700. We're sitting, $1,900 at the moment. It's hard to imagine the gold price going up 5.5 times. Yes. But it did do that between 2003 and 2010, so you can do it again.
Yeah, and that's the thing, that people don't realize is that price doesn't move in a straight line. These are long-term targets. Just because it doesn't happen as soon as people think. And I think crypto has a lot to be has a lot of blame to take here because of the volatility that it moves so quickly and reaches price targets so quickly that people get sort of fell out of love with gold because of, it's not doing it now.
Yeah, well, I mean, it's quite often the case that when is more important than what in markets. But the reality is predicting when these targets will be reached is a very hard thing. But you can't ignore the fact that the potential is there for these things to happen. I mean, we see, for example, we've got a relatively, when I say short term, by the way, I'm talking days. And when I say medium term, I'm talking weeks. And when I say long term, I'm talking months. And so we see a medium target for gold of $2,400. We're sitting back at 1920 at the moment. And that will take maybe weeks or months to play out. But and of course, the long term target to 11,000, that's going to take years. I mean, that's just not going to happen overnight.
Absolutely.
But as it gets going, people will start to go, where can this end? And so and precious metals haven't really got going yet because they're the last in the cycle. We're just at the beginning of the commodity cycle, and that's the thing that people really struggle to understand because we're seeing bonds coming off, stocks coming off, and whilst that's happening, commodities are starting to go. And I'm afraid we probably ain't seen nothing yet.
Yeah. Tell me, or in your opinion, 2021 and 2022 were, in my opinion, golden years for technical analysis because in a situation or in a scenario and environment where macro and quants and I would say fundamentalists, they were struggling to sort of predict what's going on, and technical analysis has been valuable, especially in this start of this year and last year. Do you think more and more people have converted or are starting to convert to TA?
Yeah, I mean, it's quite interesting. I mean, there's a lot of people who are negative about technical analysis. And, the thing about technical analysis that I'm able to do is I am able to split up into timeframes. So I can talk about days, weeks, and months. If you've got a fundamental view of the market, it's very hard, especially for traders. It's very hard to just chunk it down into short-term, medium-term, and long-term. And
Yes.
the fundamentals would generally be right in the long run. But for the shorter-term moves, it's really hard. And I think more and more people are realizing that the market's very technical. The market's very technical.
Yes.
And so basically, we are seeing we are seeing that markets are becoming more technically driven. And that happens, of course, when you've got this high volatility, because dealing with this kind of volatility, that's where the charts really start to come into their own.
So speaking about volatility, and it's big in the news now. It's the London Metals Exchange (LME) decision to, first of all, halt trading. Halt trading is a new circuit breakers are part and function of major exchanges. But what is interesting is in a period of 8 hours, or after 8 hours, going back and retrospectively canceling trades. What is your thoughts about that, just specifically while we're talking about commodities?
Yeah, well, of course, it was a massive squeeze, going on there, and a lot of people got, who've traded in it for years, suddenly got very wrong-footed, and I don't have any strong views about what the exchange did, but ultimately, I mean, even the Russian exchange is realizing this. You can't stop the market forever, so it might have been something that they did short term, but we're seeing prices up 7% today in nickel, and we can't be assured that that was the top. I mean, we really can't, but and we're going to see that. We're going to see that in stocks. I mean, remember the days when in the crash of 87, there was no such thing as circuit breakers. Now there are circuit breakers. Exchanges can try and control it a little bit. It just controls the speed of the fall. It doesn't necessarily control the level that the market will go to. So I guess it's a way of controlling the panic. I don't feel that strongly about it. It's an event on the chart. We've got a couple of strange days on the nickel chart where there's no trading, but the reality is it's going to start trading again, and can't be guaranteed that we won't make new highs and spike higher. It's just a fact.
That's actually a very good take on the subject. Don't get bogged into the why and just focus on the what, I guess.
Yeah, I mean, I look at the effect, and I'm not really interested in the cause. Basically, the chart represents everything that everybody already knows about that particular instrument. And so, I always say to people, tell me something that I don't know or that the market doesn't know, because any view that you tell me that is, unless it's inside information, which I probably would rather not know.
I was about to say is if you have Nancy Pelosi's broker, then maybe that's a different story.
Yeah, and people have said to me, when things have happened, like there's been a news shock. Well, the chart couldn't have predicted that, and I go, yeah, but nothing predicted that. Just because the chart couldn't predict it doesn't mean necessarily that the fundamentals will predict it either. So, but the bottom line is the chart is a study of everything that everyone knows about the market, and that's our starting point.
David, thank you so much for joining me today. Before I let you leave, I'm looking for one or two trades or ideas or scenarios that the retail traders can sort of keep an eye on in the short or medium term.
Well, I guess there's always a feeling that if you look at stocks, there'll be a lot of people thinking, "Oh, I should have sold my tech stocks, a few months ago." And one of the things I always say to people is, when you find yourself saying, "I should have sold there," that's a sell signal. And when they say, "I should have bought there," that's a buy signal because we can only spot tops and bottoms retrospectively. And there is a saying, top pickers and bottom pickers become cotton pickers.
Yeah.
The most important thing is we follow the trend. So
yes,
commodities are going to be really volatile. So the one place I think for most investors and traders to really be thinking about is precious metals, because that is likely over the next few years to be an area that's going to go well up with all this uncertainty. So, I have a lot of clients who I run through gold stocks for them. We pick out the ones that have got the best upside targets above the clouds and the ones that look good and are probably outperforming the precious metal as well. But so the simplest advice is gold stocks, which is great for anyone in South Africa, of course.
Yeah, absolutely. I mean, I think our country depends on it at the moment. Is our mining activities.
Good news for you guys.
David, if the listeners want to connect with you and Updata, where can they do it? Obviously, we'll leave the links in the socials, but just for clarity.
Well, updata.co.uk. I record chartstoday.com every morning, so you can go on chartstoday.com and register there. You'll find me on YouTube. And then on LinkedIn, I've got over 20,000 followers on LinkedIn. So if you want to connect with me and follow what I'm saying and doing in markets, more than happy. Just get in touch.
Ladies and gentlemen, superstar technical analyst and market guru, David Linton. David, thank you so much for joining us. To our listeners, peace, love, and prosperity. And we'll catch you in the next one. Cheers.